Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Sunday, November 27th, 2022. Excuse me. I hope everyone had a wonderful holiday weekend, or a holiday Thanksgiving, and then including the weekend, and are getting ready to come back in and trade tomorrow. Doing a quick review of where we are. I will take a little bit deeper dive likely tomorrow in the form of a podcast, of the Eye of the Storm podcast, and giving a little bit broader view and also including some of the building fundamentals that may start to contribute to how these markets are acting, including volatility, including algorithms, including a lot of information. So that'll likely be in a podcast. Starting with the S&P this afternoon, this evening. Again, we are in a larger corrective phase down, and that's off of the all-time highs. And so far, within a cycle degree A wave down, we are in the ABC portion on a primary degree, and within that, we are in the C wave down. Within that primary C wave, we have completed the first wave of intermediate degree, wave one. And what we're tracking now is the near completion point of that intermediate wave two. At least that's my anticipation, is that we're winding down. And so I want to show that here on the daily, that we're still in there. See the position of the moving averages, all of them now running higher, not running higher, but pointing higher or heading higher. This has picked up a nice slope. The 50s are picking up a nice slope. The 4 and the 8 are turning. The 20 is probably getting ready to turn as well. Now, I immediately really want to go down to the hourly, and so I can start talking about this internal, because what I'm really now going to focus on is that within this final 5 up, or this minute degree 5 up, to finish a minor degree C wave, right? So again, there's the A minor B. We're in minor C, and within that C wave, we are in minute wave 5. And within that minute wave 5, I'm thinking we're getting ready to complete the subminute wave 4 and start on a subminute wave 5 to the upside. And then that, in my estimation, should complete what I'm counting. So let's take a look inside of all of this. So how do I look at this? First, I'm going to go up, and then I'm going to bring it back down. So now I can stare. I did a little bit too much. Pardon me for that. Let's try that again. I want to go up and then bring it down, because what I'm going to be connecting is the third. Oh, yeah, it is. Down to the bottom of what maybe is this fourth wave. But before I do that, one more thing. Let me go back over and let's put in what a fourth wave could do. And in that case, they would be just retracements. Again, the same levels I just pointed out, but without going down. So a normal pullback would be down to 382, 4006. So we are kind of heading there. Right now, we're trading around 414, so it's a little bit more downside. Here's what the market cannot do. I'm counting this as wave 1 of this 5-wave sequence. There's 1, 2, 3. This is the 4. The 4 cannot overlap wave 1. So we're talking about 3993, 3994 in that area. So it's still a ways away. And so it can definitely drop down for 4006, still be healthy, put in that 4, which I'm going to leave there just as an anchor. There's a break there, takes that away. Remember, a break to the 50 takes that away. You can get down close to it, but don't break it. So 1, 2, 3, 4, and then we get a 5th wave up. Where can that 5th wave take us? So if we got those, then our next step would be, we're going to remove those and then put in the extensions. And with the extensions, we're actually going to estimate now. We're just going to give an estimate. because we're going to track it based on wave 3. So if this, let's just say, what did I say, 4,006. So let's go 6 right there. So it comes all the way down to that 50%, not 50%, but the 382 level. So that would be it. What can we expect in a wave 5? Well, accordingly with the Fibonacci and a fifth wave as it relates to the third wave, the most common retracement would be 62 or 61.8. That wave 5 would travel 61.8 times the length of wave 3, and that's 4,075. That takes us above. The 5 needs to break to a new high above 3. That would certainly fit that bill, and we would be looking for 5 waves up. Outside of that, the next level would be 100%, which is 4117, 4117.50. And you could wrap a little bit around both sides, give a plus or minus. But that also fits to what I have been discussing even last week when we were adding, I pulled that back out again, the additional fibs in for wave 3 for this minute wave 5. And if that's the case, we're going to put one more layer in there. We're going to go from wave 2 to the top of wave 3, down to the bottom of wave 4. It's pretty good. And you're going to see where things overlap. 618 overlaps with 0.5. So 50% just takes us a little bit above that, but that could be enough. 4061, 65. And then we have the 50% of 4060, or almost 4061, and that does clear that high. And remember, we're pushing towards an ending point, not to a breakout where we're going to just keep going and going. This isn't a completing move, not necessarily the start of the next leg up. We've been coming up off of that low. So it looks like we'd be completing and getting ready to begin to head lower again. So we have the following. Looking for the completion of wave 4 right now, just through an estimate up there at 4,006, which that area will provide some support. And it was the 382, Fib 382 support for a fourth wave based on retracements on that level, on that move right there. Outside of that, then we'll be looking for it to complete and to rally in a fifth wave. So these would be preliminary based on we're basing them on a preliminary low coming in there. If it doesn't, you make your adjustments. You go from that, the bottom of wave 2 to the top of wave 3 to the bottom of wave 4. If wave 4 comes down to here, it's wherever it stops, and it has to be above 39.93. If it breaks 39.93 and keeps going and comes down below these 200s, it could change things. And it could change the count. We'll wait and we'll see. Because this wave, this 1 was pretty strange, 2 is normal, 3, kind of weird. So it could be in its own way forming a strange type of a wedge. But it's not really wedging in my book. So that is the S&P. Now over in the NASDAQ, different, a little bit different, but same move in a way. Here in the NASDAQ, again, same count in terms that it is finishing or hoping to finish a intermediate degree. Let's pull it up so you can see intermediate wave 1, still the same, A, B on a primary degree, primary C wave down, of which we've completed intermediate wave 1. We're waiting for the next shoe to drop, so to speak. So once this wave 2 is complete, but it's in here in the NASDAQ, it does have a ways to go, because the expectation would be that it gets itself back above 12,112, 113. Well, actually that high, which is 19, that we get above 12,000 or 12,119 and likely start heading up towards 12,500. Now that was my expectation for the second ABC. Now I'm going to drop it down real quick and let's take a look at what's going on in this hourly. We're still okay, but if we're counting this is A and this is B, we got to get a C wave now. C wave, I would expect it to get itself above 12,120. And how I might come up with that is again, measuring this sequence against this sequence. But I could take it out one further. I'm just going to use that C wave. And yep, I'm going to use it that way. We're going to go here to here to here. And I'm looking for an ABC. So this would be the A and there's the B. And where can the C wave, what? And this is just truly raw estimates because I have no idea if this is complete. And if it's going to start up and do a C wave. But you can see 50% is above, nicely above. 618 even cleaner. So we still have 12,440 to 12,500 in the view. 12,572. What's going to drive it up there? I don't know. Because I think there's more negative that's going to be hitting the NASDAQ than anybody else. But we'll see. We'll see what could possibly carry it higher. Next week, by the way, we're going to start our next round of economic figures. So we have Tuesday, we have consumer confidence. Then on Wednesday, we have the GDP and international trade in goods. GDP could toss the cookies there. And then on Thursday, we have jobless claims, personal income and outlays. And then on Friday, the 2nd of December, we have an important number, which keeps us in line with the fight on inflation. And this is where I think it's going to not be good. I think more people are going back to work, which in my heart is great. I'm glad people are out there making money. But the way that it has to be interpreted against the fight on inflation is that it's inflationary. So, and if those numbers don't show that more people are going on unemployment, more people are becoming unemployed, then the Fed is not necessarily winning the battle on inflation. We'll see how that balances out. We had massive layoffs at Twitter. We had them at Meta. We had them at Amazon. We've seen them at other Silicon Valley firms. So again, it's concentric. It's circling around the NASDAQ more than the broader market. So we could see markets like the Russell rally and drag parts of the NASDAQ higher, but the NASDAQ doesn't necessarily have to stay up there. If the pressure is on the tech titans, I don't care what they're doing in the Russell. Apple will win if there's enough pressure on Apple, if there's enough pressure on Amazon and AMD, Google, et cetera, all the way down the line, and Microsoft in particular. If there's pressure on Microsoft, and if it's positive, then I think then the NASDAQ stops and turns and then rallies to finish an A, B, and a C wave. So I think there's enough out there right now to do it. But if we continue to slide from here in the NASDAQ, that's breaking below the hourly 200 EMA, which is at 11,717. And then we start breaking below 11,527, which we saw last week on the 22nd before Thanksgiving. Then we're heading out. We're out of all this. And I'm not sure how I would finish this count, because the only thing I can come up with is that this is not that together, going back out to the 4 hour real quick. I don't want to be here too long, overstaying my welcome on these, that we'd be looking at that this was A, B, and then we're putting in a C wave for this larger X wave. So it's not, so this would all drop back down to even smaller degree, but it could, and still put an X wave in and then go again and do it all over again. Unfortunate, but true. But again, I think that we have time constraints on this as well. I think that the time constraints really draw us closer to when we start getting more economic data on a fundamental basis to see what the economy is doing, what inflation is doing, what the Fed is or isn't doing. Okay, so I'm going to leave it right there. So for tomorrow, I think if we're in this B wave, that it holds, we stay above the levels that I've just discussed, I'd look for the rally to start. The strength might be a little bit heavier in the Russell and in the Dow. where the S&P, because of its weighting with the NASDAQ, gets held back. That could be possible, or they all go. All things are on the table. Outside of that, have a great trading day tomorrow. And the next update will be on Monday, November the 28th.